You're listening to the Cash Podcast, creating affluence, success, and happiness with your financial surgeon, Adam Koós, President and Portfolio Manager at Libertas Wealth Management Group at libertaswealth.com.
All right, happy holidays, everybody. This is our final podcast of the year, and I'm going to spend all of our time today looking back on what a crazy year 2020 was for the stock market, the groundbreaking volatility that we've experienced this last 12 months and especially the last 9 months, and some perspective on living through the fastest stock market crash in history. But first, as always, some housekeeping items. If this is your first time listening or watching, thank you for joining us. The Cash Podcast is produced weekly, and as stated in the intro, Cash stands for creating affluence, success, and happiness, and that's our mission. My hope is always for you to learn a little bit more on each and every episode so that you become more successful, wealthier, happier, and more educated than you were when you first started listening today. So please come back often. Subscribe both on iTunes. We're on YouTube as well. In addition, you can follow me on Twitter at Adam Koós, and I'm on Instagram at Financial Surgeon. Last but not least, all links, visuals, charts, tables, and educational resources are always available on our website. And today I am going to have about 5 or 6 charts. So if you're listening on iTunes today and you don't get a chance to see the charts on the fly, I'm going to do my best to talk you through them. But you can always go to our website at libertaswealth.com, click on education, and then from there you can click on the podcast in the drop down and see the charts down there, which we'll have uploaded for you. So let's go ahead and get started. So again, what all I want to do today is just kind of look back from a different perspective on 2020 and how crazy it's been. I think it's been rough for everybody in their own way. Some people have lost their jobs. Some people have had to change the way they do business. There's a lot of people working from home these days, obviously. In some cases, that's good. In some cases, it's tough. Everybody's been affected personally, maybe in different ways when it comes to the virus this year. I know me personally, I lost one family member a couple weeks ago, and we have another family member who's currently in critical condition up in Cleveland. I'm really hoping that he pulls through. We got really, really nervous there for a little while a few weeks ago about my dad and how he was doing, and we were worried we might lose him. Thankfully, he's recovering now, although it's going to be a very, very slow and long and frustrating recovery, but all that matters is that he's okay. My mom got the virus, my sister, my wife. I don't know how I didn't and how my 2 boys didn't, but we somehow got through unscathed. But I really do hope that all of you out there are staying safe. Or I guess to add some humor here, as I keep saying, staying positive but testing negative, because this is all going to be over in the not-too-distant future. We obviously have vaccines that are coming out now to healthcare professionals, then seniors, high risk, and then eventually, hopefully by fall, everybody will have the opportunity to be vaccinated if they choose. So hope you're hanging in there, but let's go ahead and jump into the charts. And I always like to start with a quote for those of you who've watched or listened before. And today's quote is from Walter Deemer. He's a retired technical analyst down in Florida. And he said, "The stock market will do whatever it has to do in order to embarrass the greatest number of people to the greatest extent possible." And that's just how it is. Oftentimes people get overconfident and they get greedy, and all of a sudden things fall apart. And the other times people get complacent. They sit on the sidelines. They think the market's got to crash tomorrow. It's got to go down, and then it just doesn't, and it just keeps grinding higher and climbing the wall of worry. And as there's another quote in the business that says that the stock market goes up an escalator and then down an elevator, and I think that's been very true this year. Earlier, as we look into February and March of 2020. So the first chart I want to show you is a chart that goes back to early 2020, and it shows what we'll call the Corona crash or the COVID crash, which if you compare it to the second fastest crash in history, which was the top to bottom market crash of during Black Monday, or which included Black Monday back in 1987, this market crash was twice as fast as that one. And people always talk about Black Monday and how quick it was, that big, huge one-day drop, of course. But when you look at it from the perspective and step back, top to bottom, it was twice as slow as the crash we saw this year. And then if you go back in time to the Great Depression, the bear market that occurred back then happened in probably 5 or 6 times the speed, roughly. So this was an unbelievable, fast, just wretched drop in the market of 34% in only 22 days, which is, again, unprecedented. I think we've used that word entirely too much this year. I think it should be boycotted in 2021, so nobody's allowed to use the word unprecedented anymore. But what you're looking at right here is just a box circling the space and the time over which the market went down 34%, and again, just 22 days. The next chart I want to show you is that same 22-day period, which is in the box right here that you're looking at on your screen. And for those on iTunes, it's a very small box. When we look back at 2018, the market went down about 20%, and it did so over the course of about, we'll say, 60 trading days. So it was 90 calendar days. But you can see how small that box is on your screen here. And for people on iTunes, you can check it out later online. But the drop that occurred in this year, that 35% drop, was obviously a whole lot worse, but it was about 4 times as fast, which is just, again, looking at the visual on your screen here, you can see that it's pretty astounding. I mean, I'm almost speechless when I look at this, and it gets worse. So when I look at the same 22 days, the next chart you're going to look at here is the same 22 days overlaid on top of the 2007, 8, and 9 market crash, which was the mortgage crisis. So the market topped back then in October of 2007, and what I did was I started the ticker basically at the peak of the market in 2007, and then I ran that box to the end of 22 days was all, and you can see that same 22 days was so short when compared to how long it took for the market to crash. And back in 2007, 8, 9, it was 58% drop over the course of 18 total months. And that's a normal market drop. When we think market crashes, that's normally what we're thinking, 16 to 18 months on average. Some are longer, some are shorter, obviously. But if this really kind of shares some perspective on how unbelievably fast the crash occurred this year. And then the last one I want to show you is the same exact thing. Again, 22 days overlaid on top of the dot-com bubble and subsequent crash. So again here, you're looking on your screen at a box that maybe takes up just a smidgen of your screen, 22 days. And then for 23 additional months back in 2000, 2001, 2002, the market went down 47%, and it just grinded southward. So this was I don't want to say pretty unique. This was an unbelievably, I'm going to say it, unprecedented year for the stock market, and a very frustrating year, of course. But when we look at, in fact, this year, going back to, say, 10 years, from 2010 to 2019, Callie Cox tweeted this last week, I believe it was, and I just had to share it. So from 2010 to 2019, that 10-year period, there were 58 times where the S&P 500's stock market went up or down by 3% or more. So let me repeat that. 10 years, 2010 to 2019, the market went up or down 3% or more 58 times. That happened 45 times just this year in 12 months. Not even 12 months, because the year's not over. Hopefully we're done with that. Or if we see any more 3% moves, hopefully they're just straight up, right? But that again speaks to the unprecedented market volatility and just how crazy this year has been. So that's really all for the charts today. I think I just kind of wanted to go over some things that I talked about last time when we did a market update, which was, one of the big concerns was the contested presidency and whether or not that was going to take place. We can cross that off our list at this point. That's obviously not going to happen. So that takes away something that might cause some short-term volatility or short-term drop in the stock market. The next one, and the next most probable, was an uptick in coronavirus cases. So when I recorded the podcast a couple weeks ago, I believe it was 2 or 3 weeks ago, we talked about how that was a very, very high possibility, if not a probability. And obviously that did come true, and we've seen a huge uptick not only in cases, but as well as hospitalizations and deaths, unfortunately. But now, as opposed to before, we're starting to see vaccines get delivered. So I think that this concern becomes a neutral and improving concern that's getting better. And then we have the last piece, which is still in play here, which is the economic stimulus. It could be weeks. We don't know if they're going to pass something before Christmas or not. It could take until after the inauguration. Who knows? And even after that, we've got to split Congress and Senate, we think. And if that's the case, sometimes our politicians just aren't going to agree. And the longer it takes for them to pass something, the higher the probability of seeing some short-term volatility, as well as swift and scary drops in the market that can cause some serious emotional concern. But with that all being said, just to kind of finish up with a quick bottom line stock market outlook here, the market is unequivocally in an uptrend, both on the intermediate term and long-term time frames. But I will say that price, so the price and trend of the market, as well as sentiment, the bullishness of market participants are very extended, long in the tooth, frothy, whatever you want to call it. So again, it's kind of lends itself to the fact that long term things are fine. Short term, there's of course risk of a pullback. But because the market's trend is still looking very healthy, as long as those vital signs don't dramatically decline, any dips that would occur in the next several weeks, I would consider those to be buying opportunities until the market proves otherwise. Then we have the Federal Reserve. We just talked about stimulus a second ago, but the Fed has no interest in raising rates anytime soon. So the whole zero interest rate policy, or ZIRP, is going to continue to be just that, 0%. And then eventually, I don't know when, hopefully in the not too distant future, we'll have an agreement on stimulus at the government level, and we'll go from there. And then again, I mentioned this last time, we did an update on the market as well, but seasonality. The best 6 months of the market occur between November 1st and April 30th, which doesn't guarantee positive returns, but it does mean that we have the wind at our back to a certain extent from a historical perspective, we'll say. So that's all for today. If you have any questions at all, feel free to reach out. Feel free to share this episode, obviously, with your friends, family. If you'd like to discuss your personal situation further, just remember you never have to be a client to ask a question. If you'd like to set up an introduction call or a Zoom meeting, head over to our website, click on the contact button, and you can get access to our calendar. We're booking appointments already for mid-January at this point, so we're already booking up. As I always say, there are thousands and thousands of podcasts out there, and you chose to give ours a listen. So thank you so much for tuning in. Be sure to subscribe on iTunes and YouTube. And remember, you can sign up at libertaswealth.com on our contact page to receive these updates, as well as other screencast videos, articles, and things that we send out directly to your email inbox. Feel free to follow us on Facebook at facebook.com/LibertasWealth, as well as Instagram at Financial Surgeon, and I'm on Twitter, like I mentioned earlier, at Adam Koós. So thank you so much again for joining us. I wish you all the best throughout the holidays. Relax hard, spend time with your families, give extra hugs, and we'll look forward to seeing you in 2021.
Thank you for listening to the Cash Podcast with your financial surgeon, Adam Koós. To see any charts or images that were mentioned in this show, or to check out additional articles, videos, and other educational resources, head over to libertaswealth.com.